Will the U.S. have a recession or a soft landing? This is Andrew Stotz of the Become a Better Investor community. Let's get started. Remember, this information is for educational purposes only. This is not investment advice or a recommendation. So, what do you think? Will the U.S. have a recession or a soft landing? I'd love to hear your arguments pro and con in the chat below. Now, for this presentation, I made a bunch of slides that are showing graphs and data explaining and supporting my arguments. To download this slide deck, just go to the description in the video and click on the link. Now, first, I just wanted to look at GDP growth, and I'm looking at GDP growth going all the way back to 2000. And the key thing you see from this chart is never has the U.S. government caused such a massive move in GDP, down 8.5% in first quarter of 2022 and up in the next quarter by about 8%. And then we've got a pretty relatively high level of growth recently. So let's look at this in a little bit more narrow way. The question is, which way is GDP going? That's what we want to know. Now we can see from this chart, I'm zooming in on this chart that shows fourth quarter 2021 and first quarter 2022 were both slightly negative. So you can say we've already had a slowdown there. So let me ask the question, what are the reasons for a recession? Well, I decided I would go through to try to put the kind of pros and cons together. And so let's go into the reasons for a recession. Extreme increases in interest rates are meant to slow down the economy. Basically, this is the fastest rate hike cycle by the Fed since 1980s. And in the 2004 cycle, the target rate was hiked by 4.25 in total, and we are already at that point. Now, same as in the current cycle, but it has now been done much faster. So surely a massive spike in interest rates caused by the Fed should cause the economy to go into recession. The next one is the massive rise in mortgage rates, which is dramatically slowing the property market. A chart that I'm showing the long-term mortgage rates, well, mortgage rates bottom out at about 2.5%. And here we can see that that 30-year fixed rate mortgage is now above 6%. It's an incredible increase. This in turn leads to crashing prices, which will make people feel less wealthy and hold them back from spending. Now the next point is the yield curve has inverted, which has perfectly predicted prior recessions. All recessions since 1968 were preceded by an inverted yield curve. And we can see that the inversion of the yield curve is even more dramatic right now. And we can estimate from that it's going to be about mid-2023 when we face the recession in the U.S. Let's look at another reason why the U.S. is going into recession. The surge in spending supported by government handouts is working itself through the system. This is a great chart trying to show the flow of excess savings from households. And we can see in 2020 there was a huge injection of fiscal support from the government and another huge one that came in first quarter 2021. But now those fiscal supports are actually negative and we have other negative items. So basically there's no choice. Since 2021, households have demonstrated stronger than usual spending behavior. And strong wage growth has contributed to more savings in fourth quarter 2021 and onward, and that's the red bars here. So everything is flipped, and that's another reason why the U.S. is going into recession. Now remember, for this presentation, I made a bunch of slides showing graphs and data explaining and supporting my arguments. So just download this slide deck by going to the link in the video and clicking on it. Now let's review the reasons for a soft landing. High employment means the economy is robust and can withstand the rate hikes. In fact, there's never been in long history, and at least looking back to 1997, there's never been a time that unemployment has been so low. The next reason why we're going to have a soft landing instead of a recession is that companies are highly profitable, which will allow them to bear a slowdown more easily. Operating profit margin now has risen to about 11%. So also, companies are sitting on tons of cash. We can see almost $9 trillion in cash at corporates listed in the stock market, excluding financials and real estate companies. And Also, individuals slowed their spending in anticipation of an economic slowdown. And we can see when we plot government consumption and services consumption, or goods consumptions and services, we can see that goods consumption basically has recovered, services consumption has slowly recovered. And then the next one is U.S. Democrat Party leadership will pump things up like they did, for instance, with the Strategic Petroleum Reserve, where we can see in this chart they released about basically they were at about 700 million barrels down to 400 million barrels. That was an incredible stimulus to the economy, and they did it, of course, right before the election. Now, the next reason why the U.S. is not going to have a recession, it's going to have a soft landing, is that U.S. banks are in a super strong position holding lots of cash and government bonds. This particular chart shows cash and securities held by the banks, reducing the risk of a financial sector crisis that would exacerbate an economic crisis. The point is, in 2008, the banks dragged down the whole economy. We can look at this in a little bit more detail. Right now, we can see at the peak, the banks held almost $9 trillion of cash and securities. And here we can see that that's been coming down, and basically cash is coming down pretty quickly. And at the end of 2021, the banks had nearly 40% of their assets in cash and securities. And I suspect that over time, that's going to continue to come down as it has in 2022. So compared to 13% at the end of 2007, that was a very low level of cash and also a low level of securities held at banks. But the problem is the government needs the banks to buy and hold these securities, and that's what the banks are doing. The next reason is government spending is going to be crowded out by borrowing interest payments. Here, what we can see is we've calculated our estimate of the net interest costs, which should exceed by about 2004 government spending on national defense. At some point, interest costs are going to catch up to America. And then politicians will pressure the Fed to cut rates. Remember, I made a bunch of slides showing graphs and data explaining and supporting my arguments. To download the slide deck, just go to the description in the video and click on the link. So let's review the reasons for a recession. Number one, extreme increases in interest rates are meant to slow down the economy. Number two, collapse of property market threatens spillover and drags consumer spending. Number three, the yield curve has inverted, which has perfectly predicted prior recessions. And number four, the surge in spending supported by government handouts is working itself out of the system. Now, favor of a soft landing, well, there's strong and robust employment, and it can withstand rate hikes. Also, companies are highly profitable, and they sit on a lot of cash, which allows them to bear a slowdown. And people have been anticipating a slowdown, and hence already adjusting their spending down, which means it's not going to have such a disastrous result. And then the Democrat Party will pump things up as they did with the Strategic Petroleum Reserve, and U.S. banks are in a strong position holding lots of cash and government bonds. And government spending is going to be crowded out by borrowing interest payments, and then politicians will raise the Fed to cut rates. So what do you think? Will the U.S. have a recession or a soft landing? Let me know in the comments below.